and welcome to today's Targets in Focus. I'm Monica Gibson and today I'm speaking to Sebastian Galli, strategist with Credit Agricole, to discuss his predictions for the euro against the US dollar, British pound and Japanese yen. Now Sebastian, yesterday the SNB reiterated their determination to maintain their cap on the euro. This particular move was somewhat unsurprising to the market, but today, for example, we have CPI data from the Eurozone and the US, as well as a Euro Summit which is also underway. With all of this in mind, how would you describe market sentiment as we approach the end of the trading week?
Economic data in the US has been quite encouraging, and therefore there's a lot of hesitation essentially to cut down what is fundamentally seems to be quite the right positioning ahead, but it's becoming more and more difficult to do it, and probably we're going to see more and more jitters, more and more volatility in the yen process going forward. I think that's probably something to look forward to, and as everybody's focus on Japan particularly, the U.S. data continues to be good. I think we will eventually shift back towards some of the risks which are specific to Europe, and then probably we'll go through the formation of that Italian government. We will start to get more and more nervous about Italy going forward, even to some extent Cyprus, and that might eventually lead to some form of risk-off coming out of the Eurozone. It's not going to be the end of the world, but it probably means that some form of correction is due. I think the rising volatility in FX space with particularly moves that we're seeing in sterling to a far lesser extent than yen crosses are an indication of that process. The market is due a consolidation of a larger size, and we'll look for an excuse to do so.
The US dollar has long been considered as a funding currency. Some analysts are saying due to its depreciation, attention has since moved on to the yen. For many, it's difficult to get bullish for the euro because of risks emanating from the likes of Italy, as you mentioned. But what do you expect from the dollar against the euro, however, and what will be the main factors driving it forward?
I think it's a very interesting conundrum. The market is speculatively actually long dollar now. Structurally, the entire market is by definition short dollar and long emerging markets. That is still the main position in the world. But we've seen a speculative change and an intention to being buying the dollar for good reasons. Now, it has more impact on the euro because I think if you will look at a currency, the way it behaves is through two effects when there's a shock. The first effect is what they call the substitution effect or yields. That is basically when rates or expectations of rates move between the U.S. and Europe. And then you have the second effect where people try to buy the asset which will benefit them more from something being good. And I think the change in perception is that the dollar asset will tend to benefit more. So irrespective of yield moves, we typically see that once good data comes out of the U.S., the first impact may be the dollar appreciates less against the yen and the euro, but the second leg of that process is it used to be that we would see the euro outperform in the following hours, and now what's happening is it's exactly the reverse, and that people think, well, if things are good in the U.S., then now I may put more money back in the U.S. instead of emerging markets or in Europe to buy BTPs and Italian yields. That is a significant shift in the market that's been going on for a while, and therefore, as such, is at risk of a setback. But for us, it means that there is a tendency for the strategy now to be to sell euro dollar on rallies, and that's what we're going to go doing forward. There's been, I guess, a fair amount of concentration on that long dollar leg, and as always, it's evident that you can get a form of setback, and therefore you should tailor your strategy accordingly.
According to some, other than the potential headlines coming from the EU summit, would be the possible deal over the Cyprus bailout, which is yet to be discussed, albeit unofficially. There has been some tensions between the UK and European officials over sovereignty issues of late, but what is your outlook for the euro against the British pound?
Yeah, euro sterling I think is a fascinating trade. What we've seen is essentially move from a low range in euro sterling towards a more extreme one. And I think we're in the process of reversing away from that extreme one. There's been a lot of depressed attention towards the UK economy, the same way as a little bit more positive view on the euro. Maybe it's the wrong way to phrase it, but a tremendous amount of negative attitude towards the UK. Economic surprises have reached an all-time low in the case of the UK, so people are incredibly depressed about the UK economy and are reacting very, very poorly to it, up to a point where that degree of bearishness is now almost at historical lows if we look at over the past decade. That typically means that you're up to the point where we could get a reversal in sterling, and we see that in euro sterling, and that means it's going to be difficult to reach 0.90, 0.91. We'd actually sell levels above that, And what we're seeing right now in the past days or so is actually a reversal in the euro sterling trade, and I think it may have some more legs to go. It also does mean that we will settle and consolidate eventually in a lower range in euro sterling for a while. But at the top side of euro sterling, above 0.90, probably above an 0.91, is one to sell. It doesn't mean that we like the sterling at all, for that matter. It's just a matter of which one you do not like the most, whether between euro and sterling. And whereas before we would prefer to have a short sterling dollar positions, and now we would typically prefer to have a short euro dollar position. But you can still be short sterling to some extent. It's just a lot safer to be short euro dollar.
The euro weakened against the yen this week as investors avoided the single currency upon learning that the eurozone industrial output figures missed expectations. The yen, on the other hand, saw some support on sentiment the currency has weakened enough in recent months due to Prime Minister Shinzo Abe's calls for looser monetary policies. But how do you think this pair will perform in the weeks and months to come?
As I said, it's becoming more difficult. So we are bearish on euro dollars, therefore we expect it to go lower. The dollar-yen leg will be more volatile going forward, and that for us means that euro-yen side will have a tendency to not perform well, maybe with a mild negative trend, but mostly be a volatile trend, and therefore one which is maybe not the best thing on earth to want to trade going forward. So that's really a very unclean type of position. If you are positive on risk and bearish on the eurozone, then it may well be that you want to be long CAD, let's say, and short euro. That would be a nice way to do it. The euro-yen mix is a very complex mix, and one which where errors are far more likely to be done. And it's just a very, very difficult one to do. The euro dollar is a bit cleaner, and the dollar yen one is going to be very hard to work with. We don't even know what they're going to do over the weekend if they pass the vote. There might be an announcement before Monday in terms of BOJ policy. They might disappoint us, or they might not disappoint us. And then that's a very difficult thing to trade if you're not trading in option space.
Sebastian, thank you very much for your time and perspectives today. Well, that's all from me, but for a reminder of the biggest market movers, click back to Dukascopy for the weekly wrap-up with Jennifer Cordingley. Bye for now.